Ever heard of SRI and ESG and thought, wait, aren't they the same thing? Well, not quite. One is all about values, the other is about performance. In this video, we'll break down exactly what makes socially responsible investing SRI different from environmental, social, and governance ESG investing in the simplest way possible. You'll live with a clear understanding, a few real world examples, and maybe even a new way to think about your money. Let's get into it. Welcome back to BizCase Studio. If you are new here, BizCase Studio simplifies finance and MBA topics using real world concepts and case based explanations. This is episode 4 of our Sustainable Investing playlist, and we are glad to have you on board. In today's video, we'll unpack two terms that often get mixed up in the world of sustainable investing: SRI and ESG. What do they mean? How are they different? And which one is right for you as an investor? Let's begin with SRI, or socially responsible investing. SRI is all about aligning your investment with your personal or moral values. It's what we call an exclusion strategy, meaning you deliberately avoid investing in businesses you believe are harmful. For example, many SRI funds stay away from companies involved in tobacco, weapons, gambling, or fossil fuels. The idea is simple: if you wouldn't support it in real life, you shouldn't support it with your money. Now let's talk about ESG, which in the previous videos also we have talked a lot. Just a summary, which stands for environmental, social, and governance. Unlike SRI, ESG is not about excluding companies based on personal beliefs. Instead, ESG evaluates how companies are performing across three critical areas. Those are environmental responsibility, social impact, and governance practices like transparency and leadership. It's a scoring system used by analysts and investors to assess whether a company is sustainable and investable. Now, here where things get interesting. While SRI is more value driven, ESG is data driven. SRI asks, do I agree with this company stands for? ESG asks, is this company managing its risks and responsibilities well? That's the difference. So while SRI often involves avoiding certain companies, ESG helps choose companies with stronger sustainability performance. Let's look at an example. A socially responsible investor might avoid investing in a profitable alcohol company, not because it performs poorly, but because it doesn't align with their personal or religious belief. SRI funds typically use strict screens to exclude industries or behaviors seen as harmful. On the other hand, ESG investing might favor a company in the energy sector, not because it's perfect, but because it's actively reducing carbon emissions, has diverse leadership, and treats workers fairly. ESG analysis is often used by large institutions, pension funds, and analysts to manage risk and find sustainable long term growth. So, can these two ever work together? Absolutely. A company can be highly rated on ESG metrics and aligned with SRI values. In fact, many modern sustainable funds combine both strategies using ESG scores to build a values aligned portfolio that also performs well. Now, the big question: Which is better, SRI or ESG? Well, it depends on your goal. If your primary motivation is ethics or social impact, you're likely leaning towards SRI. But if your goal is long term performance with risk control, ESG will offer more tools and data. Many investors today use ESG frameworks to shape SRI aligned portfolios, combining the best of both worlds. Here's the key takeaway: SRI is about what you believe in, ESG is about how companies behave. Both play an important role in shaping a more responsible, transparent, and sustainable investing landscape. What about you? Think on this. Would you prefer to invest based on your personal values or based on ESG performance scores? Drop your answer in the comments. I love to hear how you think about money and responsibility. And maybe let's brainstorm and discuss. Thank you for watching. If you found this helpful, please like the video and don't forget to subscribe to BizCase Studio. We are breaking down complex businesses and finance concepts in a way that's easy to understand and apply for all. Coming up next, a look into how ESG ratings really work and which companies are leading the way. Thank you so much.